Hey, good afternoon. Hope you're enjoying your weekend. Quick BTC update here. So essentially what I'm looking at is two different ranges. So we got this old range and we got this imbalance to the upside that we're currently filling. So we went sideways consolidating for a month and we have broken up into this imbalance. We got this 21K double top and so we came back down. And this is where FOMC happened and we whipsawed. We did settle and find support at 20K. And essentially what we did was create an equal low. So we didn't break structure. Had we lost this, we'd have been looking for targets to the downside. But because we held this as an equal low, we held market structure. And so we found support and we were able to move up. We filled this FOMC wick, took out 21K, and we have moved into this 21 to 21.5K area. This area has a lot of confluence, both technically and in terms of liquidity. So there were a lot of short liquidations that took place here. And if you go to our Twitter, you can see in our last tweet, we posted this heat map. And you can see there were a lot of short liquidations here. So if you want to check that out, just go to our Twitter. You can see it here. So there is a lot of confluence here. And this is key resistance. So if we're looking for bullish continuation, what we don't want to see is that this is distribution and a fake out above 21K before coming lower, right? We don't want this to be a liquidity grab and then we break back into the old range and nuke. So we got to be wary and watch out for that because price does that a lot. Here, for example, right? We came out, took out this high, fake out, liquidity grab, and then we came lower. So if we're looking for a bullish continuation, we don't want to see that happen. What would be healthy is if we came down lower, find support, maybe 20.8K, and then move higher because we're not going to break through resistance on the first attempt. That's not what happens. Even here at 21K, we had it come down, find support, get rejected, find support, and then move higher. So if we're looking for a move above 21.5K, it would be the same thing. We'd be looking for support and then try to come higher. And if we can get above 21.5K, then we got basically empty space. We'll fill this imbalance, target 22.5K. And if we get above 22.5K, obviously we'll move higher. And looking at downside, if we lose this 20.8K area and we break back into this old range, then we got these equal lows. And if we lose these equal lows, then we got support 19.1K, lose it, 18K, lose 18K, break down to the downside. So you can see I'm not saying we're going to pump. I'm not saying we're going to dump. I'm just saying these are the key price levels to watch out for and the triggers. So I'm not saying we're going to moon. I'm not saying we're going to nuke. I'm just saying these are price levels and we just got to take it level by level and track it like that, basically. One thing I do want to note is that we are creating bearish divergences on the 1 hour and 4 hour. So that is something to watch out for. And essentially that'd be it. Let's see what happens. Just as a reminder, important key dates coming up would be November 8th, midterm elections, and CPI November 10th. These are important dates to watch out for.